So as mentioned, Meta stock dragging today after news that the Metaverse is getting a reality check. Let's go to Doug Clinton, founder and CEO of Intelligent Alpha. He joins us now. Doug, Metaverse was a money sucker, billions for years. Still, are you surprised Zuckerberg's finally pulling the plug?
You know, Merrill, I'm not really surprised at this point. I'm actually surprised they didn't pull the plug earlier. And specifically what we're talking about for this product is a virtual world, really, that they developed called Horizon several years ago, really very limited user base. And so in many ways, I think it's actually surprising they haven't done something sooner here. Bigger picture, though, if you think about the Reality Labs segment, it is an astonishing amount of money they still invest there every year. Last year, 2025, they burned about $20 billion on that segment. To put that into context, they'll spend somewhere around $120 billion in CapEx this year. That was their guidance. And so, call it, 15, 20%, right, of the CapEx they're spending on AI they burned last year in Reality Labs. I think you could see more cuts in addition to this one.
Interesting. Okay, so should investors then read it as a red flag or simply a transition?
I think it's a transition. I don't think it's a red flag. Really, if you think about Meta's business, very little impact on the positive side, unfortunately, from the Reality Labs segment, other than the Oculus headset, which they are leaders in VR for. It's a pretty limited market. It's just kind of a money-losing component to their business. So I don't think it matters from a stock standpoint. I do think, again, there might be more leverage there that they could kind of free up to continue to spend on the AI side, which they will be aggressive on.
Okay, let's talk about the Uber deal with Rivian, investing in robocars. First of all, what do you think of the partnership?
Also not surprising, I would say. If you look at what Uber's strategy has been since they shuttered their autonomous group several years ago now, they've gone out and they've inked a number of partnerships. So Rivian today, they have a deal with Lucid as well. They've worked with Waymo in the past. And so I think they've kind of approached this this market as almost like kind of a Switzerland, right? They want to be a neutral party in terms of the hardware and really bring that customer demand. And so it is a pretty big deal. I think more so probably for Rivian than it is for Uber. But I think you could continue to see Uber make more and more of these deals with providers in the market so that they can maintain this sort of leadership in terms of being the demand side and then bring that supply from all the autonomous providers into it.
It does make sense, but then you don't think that this would be an exclusive partnership. Uber will be able to go out there and partner on another different car makers or vehicle makers?
As I understood the announcement filing, I believe it is actually exclusive on the Rivian side for some period of time. So Rivian is kind of locked into using Uber as a distribution partner for autonomous taxi. On Uber's side, though, as I said, I believe they probably still are free to go and work with other partners. And I think they have a plan with Lucid to be launching some limited robo-taxis later this year using their cars.
All right. I know you use AI to help manage portfolios. Does it come up with opportunities that you think people miss?
It does often. And there's, I would say, maybe two angles that we've been focused on more recently, both of them involving AI. One on the power side. Maybe it's hard to say that anybody's missing anything in the AI trade because it feels like one of the things that's worked so well over the last year or two. But I actually do think investors are still missing the reality that power remains a critical constraint as we think about the demand for AI and the data center buildouts that these hyperscalers are investing hundreds of billions of dollars into. Power will continue to be an issue, and making sure that they have enough power, I think, will be a growing focus for the hyperscalers. We've seen them do deals with companies like Vistra and Constellation. I think you'll see more and more of those deals as they've sort of committed to really powering these opportunities themselves. So Vistra is a name that we do own in our GPT ETF. I think that one can continue to work. Same with GE Vernova, which creates turbines that help to help power generation for these data centers.
Okay.
The second one I would mention is on the software side, where our models at the end of last year kind of got more bullish on software. Software had been beaten up in 2025. Unfortunately, I think we were early. Software got even more beaten up this year. We've had a little bit of a reversion more recently, but our models are kind of souring a little bit more on that trade now. We do own ServiceNow, and I think if you're looking to play that space, you do want something like a system of record to give you a little bit more stability than something that's not as embedded in the enterprise.
I was going to ask you, what are your parameters for software right now, considering how much they've pulled off?
You know, it's so tough, Marilla, because it's not really, in my opinion, about vibe coding. I mean, we are totally embedded in using AI in our business at Intelligent Alpha. I think the real challenge for software companies going forward is actually this move from human-led workforces to agent-led workforces. And if you think about a business that's run maybe entirely by agents, they just have different demands than what a human business has demand for. And so if you think about it from the perspective of like a CRM system or a workflow management system, you know, these are things that are really built for humans. They're built with humans in mind and how we need to sort of track our activity. When you're dealing with AI agents, they naturally track all of their activity. And so the use cases, I think, change fundamentally. And because of that, I think it's just very difficult to get comfortable underwriting sort of long-term value for a lot of these software companies right now.
All right, I do have to leave it there, Doug. Thanks for joining us. Doug Clinton, founder, CEO, Intelligent Alpha.